Welcome everyone to the 10th session, focusing on lessons learned developing national strategies to achieve financial inclusion, but specifically inclusive insurance. I'm privileged to facilitate this session, representing the 3 continents with Eduardo, Dante, and Kemibaro, whom I'll be introducing shortly. So this session is really about how do we get to develop inclusive insurance markets. We know that largely when you look at Latin America, Asia, and Africa, there are so many countries which still have low penetration, and there are so many people who are not served with insurance products. So the question is there a business case, or is there a case or investment case to move markets by developing national strategies? So this is what we are going to focus on. And I'll now introduce, just maybe start with some housekeeping issues before I introduce the speakers. So this session is 90 minutes long, and it has a Q&A function. I think when you see on your screen, there's a function for Q&A. Please direct all your questions to that, and we'll try as far as possible to answer the questions. So please use the Q&A feature for the questions, and then also note that this session is being recorded and will be shared after the conference. And for any technical issues, please feel free to chat, send them to the Microinsurance Network executive team using the chat function. So quickly, like I said, the objective of this session is to share experiences in the development of and implementation of national strategy aimed at propelling or stimulating growth and inclusivity of insurance services. And just to get started, I think, like I said at the very beginning, insurance markets do not naturally become inclusive, and we've seen that there are some developed markets or insurance markets which still are not inclusive. And we want to make a case this afternoon, or sorry, this morning, that you can actually stimulate inclusivity and propel growth. And then, of course, we want to make a case that because of the nature of inclusive insurance, there is need for a number of stakeholders to be engaged in the country processes. Then we want to also look at the role of the regulator, and what we'll recommend, as you will see from the experiences, is that regulators need to play a dual role, that is supervising, but as well as developing the market. And then, of course, we want to also mention that there's a case or benefit of doing a diagnosis of the market, and also regulatory environment, which is very useful in terms of determining what type of interventions that you can implement to move the market. And then finally, of course, dialogue between market players and regulators has been very critical, as you will see from the evidence, in terms of identifying what works and what doesn't work. So quickly now, of course, this slide is just talking about what the summary of what we'll be doing. On this side, it talks about how do you address market failure by stimulating demand and also strengthening supply. And of course, how do you develop a favorable and regulatory framework. The panelists. So we are privileged to have Dante. Dante is the senior advisor from GIZ in the Philippines. He's been working in this field for more than 20 years. He has 18 years experience in the microfinance, and he has been working closely with the Philippines Department of Finance and Commission and other financial regulators within Asia, which has resulted to the development of a microinsurance regulatory framework and microinsurance strategy. So today we are privileged to have Dante to share a wealth of experience and also focus on Philippines as a case in terms of moving the market. Our second speaker is Kemibaro Omuteku, and she's from Tanzania. She's currently the head of insurance at the Financial Sector Deepening Trust. And Kim has more than 17 years experience in insurance. She has also worked for 2 insurance companies, and she has been a principal officer as well for insurance agencies. So again, we are privileged to have her on this panel, particularly to share inclusive insurance market development from Tanzania. Then we have Eduardo Morón, who's the president of the Peruvian Association of Insurance Company. And he's also a professor in the Faculty of Economics at the Universidad de Pacifico. I hope I pronounced that very well. And he's also a member of the Fiscal Board in Peru. And he has also previously been chief economist at the Latin American Reserve Bank. And he's also been Deputy Minister of Economics. So again, a wealth of experience by Eduardo there to share now specifically on inclusive insurance in Peru. So to get started, we just wanted to know who is attending this call before we move. So we can have the first poll just to find out who's attending. So please just pick one option and then we'll see the results so that at least the speakers know who's attending. Okay, so perhaps we can run the results now. Okay. Oh, that's great. So we have private sector, and we also have service providers. We have non-profit organizations as well. I believe these ones are the ones that have the mandate of improving inclusive insurance. So I think we are going to have a nice discussion with that representation. So we also wanted to run a few more polls just to set the scene so that the presenters also know what the thought process is. So maybe we can run the second poll as well. So the second poll is really asking the questions, can insurers really serve the low income market segments profitably and also respond to the interests of shareholders? So the answer is yes and no. And this is more of the business case. So we just wanted to get your perspective on this one. Okay, maybe we can see the results. All right, so we have 86% saying yes, and we still have 4% saying no. So again, it's going to be an interesting discussion, particularly to get views from those that don't believe. The third poll, please. So what's the most difficult aspect of inclusive insurance? And we've given you some options. Of course, the list could be more than this, but let's perhaps focus on these options. So the first one is designing appropriate products, then getting viable scale, getting consumers to understand and appreciate insurance, then finding and maintaining distribution partnerships, data for product development, and finally aligning models to existing regulations. Again, you can pick one which you feel is the most difficult aspect of inclusive insurance. Okay, can show the results. Okay, so getting consumers to understand and appreciate insurance seems to be the most significant. And it's also interesting that no one seems to, very few responses on data and also aligning models to existing regulations. So it's very much focusing on the demand. So again, we'll learn from our speakers what has been their experience in terms of what is really holding markets to move forward. So I think good results there. And then the final poll. So the question now is, why do you think insurers around the world are still not investing in inclusive insurance as desired, especially for those that have passionate about getting people to improve their risk management through insurance? So the first one is that we still have disbelief in the business case. Then there's lack of interest from shareholders. There's lack of technical expertise. There's low demand. There's poor insurance culture, lack of data for product development, inappropriate regulations, and lack of supply side incentives. So again, you can pick one that you feel is the most outstanding in terms of why insurers are not investing in inclusive insurance. Okay, perhaps we can show the results. Okay, so disbelief in the business case. So we still have disbelief in the business case. And of course, we have that goes to with lack of interest by shareholders. And then we have poor insurance culture, which speaks to the demand issue that was highlighted. And of course, supply side incentives are also an issue. So again, we'll learn more about this. So straight away, without wasting time, I'll now ask the speakers to share, beginning with the landscape of inclusive insurance in their market. So we'll start with Dante.
All right, Lemmy, can you put up the next slide, please? All right, so good day, everyone. First, I'd like to say that it is my pleasure to share with the participants of this session today the journey of the Philippines in microinsurance market development. So let me start off with general information about the country so that everyone can situate the context of my discussion. So you'll see in this slide, Philippines is a country that has more than 100 million population with 16% poverty rate, 17% unemployment. And if you look at the insurance industry, there are 150 insurance providers which are composed of 4 subsectors: the commercial sector, the mutual benefit association, the pre-need company, and the health maintenance organization. I also put up here the number of banks because these are also one of the main distribution channels. So we have close to 600 banks in the country, classified into 3 subsectors: the universal and commercial banks, the savings banks, and then the rural banks. I'd like to say here that in terms of number of banks, it's actually shrinking, especially in the rural banking sector due to consolidation in the past years. Also good to note here the intermediaries. Cooperatives is so huge, similar to other countries, and also the pawn shops, which is a bit unique in the Philippines. We will also learn later that these are 2 main distribution channels. Next slide, please. So in the left-hand side, you will see that there is an increasing trend of microinsurance outreach. Started in 2006 at 287,000. This is the time when the first microinsurance regulation was issued. Now up to 45 million as of end of last year. And today, the outreach is around 48 million, according to the Insurance Commission. There is a 13% average growth on year, and then a 19% average growth in the last 3 years. In the right-hand side, you will see that there is an increasing volume of gross written premium, now stood at last year, end of last year, at 178 million. While the share of the gross written premium of microinsurance is still small compared to the overall industry premium, but we can see there is an increasing trend here from 2.6% to 3% as of last year. Next slide, please. Now, the market, the microinsurance market is being led by the mutuals. If we look at the 45 million outreach as of 2019, the microinsurance mutuals is taking up 57% of the market share. And this is followed by the life companies at 24%, and then the non-life or general insurance companies at 19%. And towards the bottom, you'll see in terms of market participation, the mutuals still is the biggest participants of 63%, 22 of the 35 mutuals are into this market. And then 11 of 33 life insurance company, or 33%, is participating in the market. And finally, 16% from the general insurance company. So overall market participation is around 34%. That is 42 of 122 insurers, only in the three subsectors: mutual, life, and non-life insurance companies. You'll notice in the beginning of the slide, there are 5 subsectors, but here the pre-need companies and the health maintenance organizations, or HMOs, are not yet participating. Personally, I only know of one pre-need company and one HMO that has microinsurance products. Next slide, please. Now, this slide is about the most prevalent microinsurance products in the country. And you'll see that it's still credit life, term life, personal accident, and hospital cash. This is consistent to the study findings in Asia of the landscape on microinsurance conducted by the Microinsurance Network. It was also discussed during the opening of this conference. Often, these products are bundled with other traditional coverage, such as fire and personal liability. Few players are bundling these products with natural catastrophe cover, such as typhoon, flood, and earthquake. So, Lemmy, I'll stop there. Back to you.
Okay. Thank you so much, Dante. And straight away, we'll move to Tanzania. Kemibaro is going to give us the landscape of inclusive insurance in Tanzania. Kemibaro.
All right. Okay. Thank you, Lemmy. So glad to speak about the landscape for Tanzania. So looking at this in 3 different sections in terms of the macro level, also looking at the players and the solutions. So the macro level of population is about 56.3. That's based on 2018 figures. Most of these are 2018 figures, but it's important to talk about the bigger picture. And for us, we measure against the financial inclusion. And there's been growth from 2013, looking at 58% penetration, all the way to 65% in 2017. And that also has touched on the insurance space as well, looking at 2 notches up from 13% penetration for insurance overall to about 15% penetration. We do have microinsurance regulations, and that's from 2013. And gross domestic product in billions of dollars is about 57.4. And gross written premiums as at 2018 were about $297,000. And what is important also on the macro side is that we do have a country target of 50% insured by in 10 years time. So looking at moving from 15% to 50%. Also in terms of players, there are 30 insurers, 1 reinsurer, 1 composite, and the rest are general and life insurers. And in the aggregators, the brokers, about 109, and agents 635. So right below that, you see about 12 insurers. That means there are about 12 insurance companies providing a total of 18 solutions in the market currently, based on the last figures that were done, preliminary findings. And similar to the previous speaker, yes, product ranges are from life accident credits. There is micro health. But what's a bit different is we're starting to see an emergence of crop and livestock insurance as well. And distribution channels are similar, but there's also the aspect of MNOs, mobile network operators, and more recently with the bank assurance regulations coming through last year, we're seeing also microinsurance being distributed through the banks. In terms of premiums, quite interesting with the range of 18 solutions that we have in the market. The minimum premiums are way less than $1, about 0.06 of $1 at 150. And the, excuse me, the minimum sum insurers that we're looking at are, $435. So it's a varied landscape, but also to add that over 75% of the population are in the rural space, and most of them are farmers. In addition to that, about 50% of the population are women, and we do have a highly emerging presence of the youth as well. That's quite important in terms of this perspective in the landscape, and I'll be touching on that a bit later. So that's what we're looking at. Lemmy, over to you.
Okay, and of course, finally, we get to understand the landscape of microinsurance or inclusive insurance in Peru. Eduardo. Okay, Eduardo, you're on mute.
Good morning to everybody. Thanks, Lemmy. This first slide is just a quick snapshot of Peru. You will see that most of the people that lives between $10 and $20 per day is comprised of 80 million out of 26.2 million, the total market size. The level of insurance penetration in Peru is a little bit less than 2%. That's amount to $120 per capita. And if you look at some elements that is going to be help to financial inclusion, you see this gender divide between those with an account at a financial institution, those with some mobile money account, and those that have borrowed some money in the previous year. Can you switch to the second slide, please? Okay, this is more a close look to the microinsurance sector. What you see is that we have more or less 5 million clients out of a total of 30 million on the whole population. The premiums are just 36 million dollars. That's a little bit less than 1% of the total premiums in the whole insurance market in Peru. You can see the claims there, and the one issue that I think is going to be quite important for everybody here is how are you going to measure our success? Okay. And that's very hard in microinsurance, and we are measuring here just looking at the potential market, and what we have here is that 20% of those that should be part of the microinsurance would have a microinsurance product actually do have a microinsurance product. And if you look at those products that are the most demanded, what you have is 46% are robbery and assault, 17% are personal accidents, 14% are insurance of group life, and the main products according to premiums, not to number of people, are individual life, personal accidents, and group life. Back to you, Lemmy.
Okay, thank you so much. Now we move and change or shift gears to understand more on the country processes that have been done in these markets, and we'll start with Dante, giving us perspectives and the initiatives that have been done in the Philippines.
All right, so now on your screen are the key market development initiatives developed by the Philippines. So these are the 7 pillars regulatory issuances by the Insurance Commission and then the other regulators, including the Central Bank, the Department of Finance, the Cooperative Development Authority, the Securities and Exchange Commissions. So these regulations were issued in the span of 7 years, 2010 to 2016. The framework and regulations are the product of multi-stakeholders technical working group led by the Department of Finance and the Insurance Commission, and participated in by all industry associations. The whole process of formulating the framework and the regulations, including the broad awareness and advocacy initiatives and training of stakeholders, were supported by the German Development Cooperation, or GIZ, the Asian Development Bank, particularly the Japan Fund for Poverty Reduction, or JFPR, and then the National Strategy and Regulatory Framework, which actually here is one of the biggest initiative, have set the foundation of the market development, where microinsurance is defined, including the limits of premiums, the benefits, and most especially the characteristics of a microinsurance products. We see in other countries that microinsurance is defined based on premium and benefits, but here in our regulation, characteristics of microinsurance products is actually much more important, to my personal opinion. And then microinsurance providers were also identified. It started with the mutuals, but after the regulatory framework and strategy were issued, the commercial insurance companies came on board. The branding and slogan were conceived. The formalization process of informal insurance activities of MFIs were clarified. The microinsurance agents and brokers were created. Some prototype products were developed. The policy contracts for life policies were simplified. The performance standards of microinsurance players were formulated, including the reporting standards and then also the chart of accounts for the mutuals. Now, the roadmap to financial literacy, here trainings on microinsurance advocacy and seminars were conducted across 9 stakeholder groups. This is also particularly unique in the Philippines, and I'll discuss this more on the succeeding slide. Then financial literacy roadshows were conducted in key cities and provinces of the country. It was more than close to 2 years of intervention here about the roadshows. And then also the alternative dispute resolution to already anticipate possible issue on claims. And then further on, there was also a specific regulation on health microinsurance and also regulation on agriculture microinsurance. So you see that it started with regulatory framework, national strategy, and then it went through going into a more sectoral approach, the health aspect, and then the the agriculture sector. And then finally, there was also a need to enhance the first regulatory framework of 2010. That's why in 2016, an enhanced regulatory framework was issued. And this actually provided on 3 aspects in terms of clarifying product bundling, reinsurance, and also the role and responsibilities, expanded role and responsibilities of agents and brokers. And then I was also privileged to be personally involved in all these processes since the beginning until today. And so this is actually very thrilling that these regulations are still driving the market as of today. Next slide, please, Lemmy. All right, so in the next 3 slides, I'll be discussing much more deeper how we did it in terms of the regulatory aspect, the product development, and then the final case, the national advocacy and literacy. So the slide is structured in terms of what are the processes that we have done, what value have it contributed to inclusion or to financial inclusion, and what are the concrete results out of these processes. And in this case, the national strategy and regulatory framework, we started with mapping of gaps and inefficiencies. So studies were conducted here to determine what are the different gaps and inefficiencies. And then technical working group were organized in terms of drafting the policy paper. So there were, I think, 5 to 6 series of TWG conducted to discuss the draft policy papers. And then we conducted industry and public consultations, exposure drafts, meetings of associations. We went into microfinance institutions until the regulatory framework was launched and adopted by the industry. Now, what are the value proposition on financial inclusion? So there was a clear definition of the microinsurance, who are the target sectors, clear roles of the various players in the industry, and also the even some non-insurance players that are part of the distribution aspects. The strategies for mainstreaming informal insurance was clarified. Financial literacy was also launched. The microinsurance supply market beyond the mutuals was opened. Here, the commercial insurance company participated already in the market, including bringing of delivery channels beyond the traditional agents. So this whole processes resulted into issuances of different circulars, mainly the formalization and delivery channels. There were some set up of committees in respective associations so that they continue to discuss the topic, not only in the technical working group, but within the associations. There were 2 companies that spinned off from traditional company into a dedicated microinsurance companies. Products were approved. To date, there are already 215 products. Regulator Insurance Commission has set up a permanent unit on microinsurance. This is one thing that I have not seen in any country. A regulator setting up a permanent division on microinsurance with full staff complements in this division. And finally, which is the biggest institutionalization, is the inclusion of microinsurance chapter in the insurance law as revised in 2013. Next slide, please. Okay, now on the product development. So going out of the box and getting innovative in microinsurance product development were then a big challenge, especially when we speak to the actuaries and then the underwriters who are used in terms of traditional approaches of product development. So and therefore, both government and then also the development agencies, GIZ and ADB, decided to support in this work stream of product development. So just quickly in terms of processes, we also did some demand study. We reviewed the traditional insurance contracts so that we are able to see what are the enhancements that we need to do there. We drafted the product prototypes through technical working group meetings. We also did consultations of these prototypes. And then finally, the Insurance Commission have approved the standard products. And then these standard products were now adopted by the different insurance companies in terms of pricing, because the prototype doesn't have a price. So it's up to the company to put a price, and then accordingly to their distribution model. Now, the value here in terms of product development is the prototype is kind of a public good, because it is available to all providers. So it doesn't only belong to one insurance or few insurance companies. So any insurance company can pick up this prototype product and then adapt it accordingly to their business model. There is the prototype is compliant to the circular about the characteristics of microinsurance, and then also the innovations in product delivery. And then we see the results here that the prototype had been adopted by 11 non-life insurance companies. This is a bundled product that that cover property, life, and livelihood. In the Philippines, this is popularly called BBK. We also simplified the contracts of the life insurance products, term life, and then the other life insurance variants. There was one area-based yield insurance product that was launched, and then few products have integrated natural catastrophe in this BVK variant. And my last slide for this segment is on the next slide about the financial literacy. Here is I said a unique feature, because it's not only about awareness raising, it's actually more of advocacy. We covered here 9 stakeholder groups, starting from macro level. The messages were directed to policymakers, regulators, the local government units in the provinces, the national government agencies. Key messages also were developed for insurers, for intermediaries, support institutions, the donors or the development agencies, and finally the policy holders. So 9 stakeholder groups in terms of the National Financial Literacy Initiative. So we did some mapping here of good practices. We also did it through the technical working group. We also had the consultation, and then before the adoption of the financial literacy roadmap. And then there was a mix of methodologies and tools that were used here, because there were 1.5 years of implementation of the roadmap. So a lot of communication tools were used. There were also training in terms of results. Now there were also training of trainers conducted. We call it the Speakers Bureau. And then the road shows were particularly focused in the large cities and provincial centers. My final point in this slide is actually there was massive effort of advocacy in 2011 and 12 that have effectively put across the importance and need in making insurance inclusive. However, over time, when the leadership also changes in the key stakeholders, we also saw the need to repeat the advocacy initiative. So we observed that new leaders in the different stakeholders are not really aware of how we did it, why the importance of microinsurance. So let me here just to also respond directly to your question here. What has worked in stimulating private sector responsiveness? Here I would say it's the involvement of the industry in the whole process from the beginning of the whole process. Capacity building has also played a big role in terms of increasing appreciation of the industry in the potential market of microinsurance. In terms of stimulating demand, here the main driver here is about the national literacy and then the expanded advocacy campaign that was conducted in the Philippines. And then finally, the leading role of the insurance regulator in terms of engaging the different stakeholders and then the issuances of proportionate or proportional regulations. Back to you, Lemmy.
Thank you so much, Dante. And perhaps whilst we are still with you, I have one question that really is more directed to your presentation. So Craig is asking, does the prototype or standard policies really work, or does it discourage innovation? Maybe you could answer that as before we transition to the next section.
Yeah, I think I understand the context of the question, because we have also seen this in other countries about the downside of the prototype. But in the Philippines, I would say no, because the prototype is also did not touch upon pricing. That's one. Therefore, the computation is still there. And second, it also allowed a different variant of the three aspects: property, life, and then livelihood. And then second, while there is a prototype, the insurance industry will not also prohibited in terms of developing their own microinsurance products. So the value of the prototype was it actually kicked off in terms of putting already on the table that this is the microinsurance products that is compliant to the regulations. And we are successful in this. 11 insurance companies have adopted this. I'll tell more stories later on, because this 11 is not anymore 11 today.
Okay, all right. Thank you so much, Dante, for giving us insights in terms of the market development process and initiatives in the Philippines. We'll transition to Kemibaro to give us the process in Tanzania.
Thank you, Lemmy. Noticed immediately that there's some similarities already with Dante's market. How we started in Tanzania was through a diagnostic survey that was done in 2012, and this was a stakeholder and partnership survey, and some of the partners who were involved were the regulator, Tanzania Insurance Regulatory Authority. We also had the ILO facility support, also Senfree were also involved in that, along with Finmark Trust and A2II, and of course FSDT. And that really set the ball rolling in terms of understanding exactly what's in the market, where the opportunities, who is already covered, who requires cover, who hasn't actually received any cover, and who are those who would fall under the social security platform. And within that, the findings brought out some key actions. And one of the actions was a need to look at the coordination side of things for the markets and look at an action plan. And that is when now the industry was able to gear up and look at coordination. And the slide that you see in front of you is actually the coordination structure that was put in place. And this has been what has driven all the other milestones that we see in the market. And it is a multi-stakeholder initiative. Within that, you do have right on top on the left, the steering committee, which is composed of mainly regulators. You have the insurance regulator, the central bank regulator, at that point in time, the pension regulator as well, and the Ministry of Finance being members, and a few invited members like FSDT being there and others. And right below that is a technical working group And this was a multi-stakeholder initiative and private, public, and diversity in terms of membership, including from the private sector, the insurance associations, the institutes. We also have the innovation entities, the research entities, also have some MNO associations, part of that mobile network operators. So it's quite diverse because all these players at some point in time have been involved either in the distribution part or either in the development of products, in innovation, in distribution, to be able to contribute and participate. So it's very, I would say it's a very holistic approach and a very diverse membership. Within the technical working group, there are 4 main committees. The first 3 are the regulatory committee, enabling environment. And this is composed of members in addition to the regulators, looking at where the constraints are, where can we look at the laws and regulations, and if reviews are necessary, if guidelines need to be put in place, how do we address the gaps in the demand side and also the supply side to be able to drive microinsurance in the market. Demand stimulation was looking at this committee really drives the constraints on the demand side, which are perceptions, awareness, and how they address them. One of the initiatives that has come through that includes the National Insurance Education Strategy, which looked at exactly what the constraints are on the demand side and looking at how to drive that. And it has been led by the regulator in conjunction with the National Insurance Education Committee. The third committee within that space is the supply side strengthening. So looking at the players in the market, the financial sector providers, and not just insurers, but your aggregators and others, including fintechs. How do they come in? How do they support, and what's needed to drive, and how they're able to dialogue with their peers in this space. And they've been able to look at how to prioritize interventions, implementation, and also be able to look at technical areas. And also where the gaps lie on the supply side. Obviously the skills space, technical expertise being required to address the gaps and also help institutions build up their business case to be able to start, and then also looking at the gaps within the product build and really understanding the needs of the consumer as well. And the fourth and last committee is the fundraising committee, which is one of the newer committees within the coordination space. And they are looking at the fundraising. The organization, the coordinating arms are in the process of rolling out a 10-year strategy. So there's a need to look at how some of the initiatives will be supported. And to help drive the strategies, Tanzania is currently in the process of rolling out the third strategies. There have been 2 previous strategies, 2014, 2016, and also 2017, 2019/20. So the next strategy, and this is a bigger strategy, but it's going to be a 10-year strategy that industry is looking at. So in that space, definitely there's been the private sector involved and other players involved. But all this is anchored against the policy and regulations, which we know Tanzania, the industry was liberalized in 1996, and you have the first private insurers coming in 1998. And you know that's through the Insurance Act and regulations, and then thereafter we do have the microinsurance regulations that help drive life, but also there's some revisions that are being made, some of the laws, existing laws, but also the need for regulations coming in. For example, the bank assurance regulations that came in 2019, which directly and indirectly also impact the work that has been done by the coordinating technical working group. There's also the stakeholder engagement, which has been mentioned. And what we've noticed in terms of the private sector, it's always been quite key, and some of the winning recipes have been to really keep them engaged at all points in time, sharing, making sure they're involved, receiving their input when it comes to changes in regulation, but also when it comes to developing strategies, when it comes to involvement in technical assistance and capacity building, to also see the buy-in and also them willing to participate and be involved. Market interventions, strategies, what we've noticed in some of the winning recipes are the need to actually have a combination of different interventions working together, rather than just one individual focus, perhaps on the supply side, capacity building. That needs to be tied in with other things, technical assistance, but also once the understanding is there, what aspects in terms of hand-holding if necessary, and bringing other stakeholders on board to crowd in to make sure that product has a viable distribution channel. There's innovation in place, but also the next steps in terms of growing the numbers. And capacity building, looking at the different stages the market has been in, it was necessary to get the education into the supply side beyond the traditional insurance space, but an understanding of microinsurance. What is it, how does it work, and how can they be part and involved in the process? Please move to the next slide. All right. This is a snapshot from 2012 when we had the diagnostic done all the way to date. So it's a combination of different things. We'll not go through each year, rather mention the highlights and some of the things we've noticed that have worked. For example, before Tanzania launched the Innovation Challenge Fund, the first of its kind in Tanzania, specifically for risk management, stroke insurance, was the fact that the market had to have gotten to a certain point of understanding to be able to participate. And that meant capacity building to understand what microinsurance is, involving the CEOs through forums to get them to listen, learn, looking at the business case so that they were able to get to a point where there's sufficient buy-in from their organization, from the shareholders to be able to participate in this, because they also had to put in their time, their resources to be able to be eligible into this. The other thing is technical assistance, which was provided by the support team, the microinsurance coordinator. So there's a very good linkage between the regulator, the market as well, and any other key stakeholders. So there's continuous back and forth flow between them. The other thing that we have noticed is that the strategies were very key in providing direction and focus and bringing people together for a common purpose, because you'd find some insurers were slightly ahead than others, but several of them were willing to share their experiences, you know, what they learned, the positive and negative, and be able to engage. But also what's key and we've picked up is the fact that partnerships do work. And in most cases, one insurer, one broker, or any other aggregator cannot do this alone. There's a need to have several partnerships in place to be able to deliver quite well. And what we've noticed in this market is that quite a number of insurance companies are highly focused in the urban areas. So it was important for them to actually start now learning who exactly the microinsurance customer is. How do we define them? What are their needs? Where are they? And how can they be able to be served? And this is where the regional business cases became quite key. And these were where we were able to have the insurers be able to go out into the field, into the rural areas, and be able to speak to the stakeholders, speak about insurance, but also learn from these stakeholders and potential policyholders in terms of where their needs are. And quite key were the farmers and the youth and the women, to be able to see they're very diverse groups, but where are their pain points? Where are their key risks, and how can those be translated or transitioned into insurance solutions? The other thing was capacity building. So there was a need to build local capacity within the country. So currently there are several trainers who are able to continue on the work that has been started in terms of microinsurance 101 training, we would say, to be able to get more players as the interest comes in, to be able to push that and to get as many people involved in terms of the learning and understanding of microinsurance. So where we stand right now in 2020, having gone through this journey in terms of regulations, in terms of capacity building, in terms of technical resources available, innovation funds, having field visits for stakeholders to understand, having the coordination arm being able to work together, execute strategies is the point whereby we're able to look at our next strategy and our third strategy, which should be rolled out before the end of this year. That is the target, and it's a big one, as mentioned earlier, 10 years to be able to get 50%. And you know, some key focus areas obviously are capacity building, but also distribution channels, and agriculture is very key. Having mentioned that majority of the population are farmers, so how are we able to address the potential risks that they face? How does technology come into this, automation, innovations, and also making sure the market is as inclusive as possible. We are also finalizing a landscape that we had carried out on this side, and the institute, the organizational arm for the coordination, the technical working group has been fairly informal structure, so there's a need to look at how to formalize it as we transition to the strategy. So different milestones, which the industry overall has been happy about, but also the learnings that come in. And the regulator has been quite key because they are in all those separate committees, but also the Commissioner of Insurance is the chair of the steering committee. So it's quite key. And in addition to that, what they've done, which is quite unique, is they've set up a product approval committee within the regulator's office to be able to receive all the microinsurance products that come in and almost fast track to make sure that they're received, they're reviewed as quickly as possible, and go ahead. So, or the feedback that's required for any tweaks or transitions that need to be done are also seen through. And the other thing that we've seen is the fact that some organizations, based on the buy-in and the approval from their shareholders, has been able to set up small units for microinsurance to be able to drive the work that they're doing in that organization. But also, if not a unit, have a point person within the organization to help drive those initiatives. So the Tanzania journey since 2012 has been a gradual, steady one with growth and also some good transitions and learnings. Yeah, Lemmy, over to you.
Okay, all right. Yeah, thank you so much. Very interesting process there in Tanzania, looking at the last 10 years, 3 strategies, with the last one to be launched. Maybe just one question to you, Kim, which is relevant to your market as well. So there's a question about mobile money being the driver of financial inclusion. To what extent has that been leveraged in Tanzania in terms of insurance?
Okay. All right, thanks for that, Lemmy. That's correct. If we look at the financial growth, there was a big jump from 2013 to 2017 of about 10% points, from 50% to 60%. So yes, it's been a key driver. And Tanzania has been unique in several ways. Unlike most markets in the world, we have several mobile network providers, about 7, if I'm not mistaken. So that's made it quite diverse in terms of reach, but also in terms of access to a handset, whether it's ownership or having access, has also been quite diverse. And the other thing that comes to play is interoperability in terms of a consumer or a mobile holder is able to link within other networks and use the services. So in terms of drivers, we have noticed that several products that have been rolled up and some that were existing from previous have a mobile platform. And it could be in several ways, either for the payments or exactly having a product that is built into the menu for the several providers that would be able to have that platform as a payment system. But we've also seen the use of SMS, short code, being used as a form to be able to register and log on. So there's some big players in the market. We do have Milvic that is known in the market in terms of being able to offer the products that they do on the platform through Tigo. So that's been one key example. There have also been other solutions, including Jamii, that have used the Vodacom platform and menu to be able to have signups. So yes, that's one aspect, but not forgetting different distribution channels have also been used, which some are very traditional in terms of the credit life through some of the MFIs and the informal groups, the SACCOs, etc. So yes, I think it's a key contributing. I would agree with that, key contributing, but not the only platform that we've seen. And some of the other innovations that have been quite unique, including the direct sales agents, which came into the market in about 2018. And that was whereby brokers and insurers were able to get sales points at different locations, being able to provide the required minimum insurance skills to have stakeholders and outlets being able to distribute specific products. So that has helped several of the players in the market, including one known as MHI, to be able to reach a higher population than when they had previously engaged in that model.
All right, thank you so much. We shift gears now to Peru. So Eduardo will also give us insights in terms of the processes in Peru to drive inclusive insurance. Eduardo?
Thanks, Lemmy. Could you help me with the second slide? I still see the Tanzania one. Lemmy, can you help me with the slide?
Yes, it's the one. It's still showing now. Are you able to see it?
I'm still looking at the Tanzania, the last one.
Okay, let me try to go and.
So I can start talking. And that's probably the best way to describe our journey. It has not been an easy one. It has been a non-linear journey with many stop and goes, with a different change of heart from the central government. At some point, there was a lot of interest of the central government. In 2011, they launched a national crusade for financial inclusion, but the next government actually completely forgot that initiative. So it has not been an easy way to now I see a different slide. Okay. Lemmy, I'm not showing you're not showing the one that I request. I'm sorry. So I'm gonna use the one that I have in my phone. Should I put my slides or I don't know? Lemmy, you're out.
Yes, Eduardo, if you can put your slides on, maybe.
Okay.
Let me have internet connections.
Lemmy's. Okay. This is the one that I think it covers whatever I want to talk with you guys. As I was saying, the regulator actually surprised the market in 2007 with a special regulation for microinsurance. They have already been doing a lot of work on financial education by this time, especially geared towards not a part of insurance, but a part of banking. But this special regulation actually define in a particular way what the regulator understood as the microinsurance market. They put a limit, a ceiling of how large can coverage could be. It should say lower than $3,300, and the maximum size of the premium was supposed to be $3 per month. Okay, so that definition, that a quantitative definition was, of course, completely arbitrary, and this was a big push from the regulator. Actually, that push lasted a couple of years, and the regulator saw this new, this first international standard issued by the ICII, and how to regulate those markets, and those limits were completely deleted. Okay, and now the definition was changed in a change of the regulation. Now it was more on a qualitative approach, and the idea was to that those products of microinsurance products should be those that are focused on low income population. Okay, the problem is that as I mentioned in my first part of the presentation, is that you are talking about probably 2/3 of families if you are looking at low income population. So it's a huge market, and a very heterogeneous market. So from that, we have our first national initiative that was launched in 2011 from the government, from the central government. This enabled the regulator to launch a wide study conducted actually by the Access to Insurance Initiative that covered the whole ecosystem in Peru. Distributors, the discussion of special regulation, the discussion of the carriers, the discussion of telco, everything. Okay, and as a consequence of that, actually a new legislation was introduced, it should say, in 2016. Okay, the problem was that once that legislation was introduced, as I said, the central government decided to forget about this whole idea. Okay, so there was a lack of interest from the government to keep pushing the idea of financial inclusion, and this new legislation actually moved to a combination of qualitative and quantitative approaches. Okay, so the first couple of years of this regulation, actually, it wasn't that much of a push. And why is that? And this is something that should be very important to understand to everyone. Is that you have, along with this microinsurance regulation, you have other regulations that actually could be used, and those are the regulations for massive products. And those regulations actually were somehow less problematic for the insurance companies. Okay, they were more easy to comply with. The punishment, not only from the main regulator, but also from other regulators, were easy to comply with. So you didn't see that many products, new products being registered along with the new legislation. Okay, so I think trying to convey a message to those countries that are in the middle of a discussion of what works and what doesn't work. I think one point that I can reflect is that it should happen within the country. A clear discussion of how are we going to measure our success. Okay, we have to understand what is the real size of the potential market, because one basic measure of our success is how much of that market actually is being covered by this type of products. So are we going to distinguish between firms and families? Are we going to distinguish between those main insurance products that you have seen in the three experiences that are the ones that most of the time show up as the typical microinsurance products that are being sold out? And also a second way to measure the success of all these initiatives should be how does it compare the performance of those insured against those that are not insured. So if you're talking about firms, are those insured firms, micro-insured firms, are getting lower interest rates compared to the ones that are not getting microinsurance coverage? If that is so, by how much these interest rates are actually being lowered? So if you have a credit life microinsurance product behind that transaction, you should be getting a lower interest rate. Is that being actually met in the market? So we have to have those metrics to actually understand how well is our initiatives are actually working or not. And if you switch to families, or sorry, if you keep on working on firms, are those insured firms are actually growing faster? Are they accumulating assets faster than those that are not insured? Okay, so you have to find a way to measure the success of these initiatives. And now if you switch to families, are those families that are actually getting some, I don't know, hospital cash products, personal accident products, or term life microinsurance products, are actually not falling into extreme poverty compared to those families that are actually not insured? Okay, so I really find that we have to work much harder on how we measure the success of all these initiatives, because as you can see from the Peruvian experience, you are like, you don't know where to aim. Okay, where is the real market? Okay, and what is the real product that is actually going to serve that part of the market? Okay, and maybe it's not going to be a standard microinsurance product. Okay, but actually you are targeting and you are actually reaching the population that is the focus of this inclusive insurance strategy. So in my view, if you do not actually have those metrics, it's very hard to say that your country or my country, in this case, is actually doing a better job or not regarding these microinsurance initiatives. Back to you, Lemmy. I will stop sharing this. You are muted.
Thank you so much, Eduardo. And let me just switch back to my screen. Okay, thanks. Thank you so much for sharing the country processes. And since what for time, we are a bit running out of time, and we should also be able to address some of the questions that are coming. So one question that has come up, which I want to ask maybe Dante to share. I think someone is asking from the regulator perspective, to say how can they get started if there are no products in the market, but they want to drive inclusive insurance. So perhaps Dante, you could maybe assist with that question from Fatima.
Yeah, Lemmy, thank you. Of course, we don't. I mean, I don't fully understand the situation of the question, in which country of this, because it might be a trap. What I'm saying is, if it is going to be driven by a regulator, what we have seen in the other markets, in the other jurisdiction, is a standard product is put on the table, like our experience in Nepal. So this is hardly driven by a regulator on the frame of financial inclusion, and then the regulator in a nice room put product features and then ask the insurance players to adapt this, which it does not work very well in this situation. The Philippine experience, there is also a standard product, but the process was different. It started with a series of consultation with the industry, and then the industry was asked how they think is going to be the right approach in terms of getting into this market. Here, the role of the regulator is more on the facilitation side, and then later on putting an enabling environment. So what I'd like to say is not going into the trap of really pushing this too much in terms of putting a box and then requiring the industry to subscribe to this, because they will do this because they are regulated entities, but ultimately it will not fly.
All right. No, thanks. And before we open up to a few more questions, I just wanted each one of you to just give us insights in the lessons learned now in these country processes. What has worked well? What didn't work? What would you do differently if you were to initiate another process? And perhaps that will be for the benefit of those that may want to do similar processes in their countries. So we'll start with Dante, then Kemibaro, and then Eduardo can give us also insights from Peru. So maybe I'll give you 2 minutes each to just give us, summarize the lessons before we can have another set of questions. Dante.
Yeah, let me please put up the next slide, please. I'll go fast on this. So I'll just summarize. I'll first start with the success factors in the Philippines, and before and after this, I'll also say the lessons learned. So just to summarize this, the driving success factors in the Philippines are public and private dialogue, here leadership of the insurance regulator, consistent leadership from beginning until we see concrete results. I've already mentioned the proportionality, because this is also special to the characteristic of microinsurance. The multi-stakeholder approach, the advocacy approach, more than literacy, more than awareness. And then on the industry side, the support from management. And in terms of lessons learned, Lemmy, here I can offer 4 lessons learned out of the journey of the Philippines. And one is always to have you know, a champion on financial inclusions. In government, there should be a champion that we can always rely on, and also in the industry association. Second, do not get stuck on what is not written in the current regulations. It is actually an opportunity because it doesn't disallow to do microinsurance. It's not usually it's not clear, but in the Philippines it became an opportunity. So we should not be stuck in terms of what is not written in regulation. Third is to institutionalize the gains, and then sustaining the growth, which is not an easy task. And then the last lessons that we can offer is advocacy. Not only awareness raising is a continuing process, but it is also expensive. So back to you, Lemmy.
Okay. Thanks so much for that great summary. And then we can have Kemibaro as well give us some insights from Tanzania.
Thank you, Lemmy. I think based on time, I'll focus on 2 key ones. I know there's a list there, so I'll focus on number 7 and 8. Not that they're any more important than the rest. I just believe the others have been touched on at some point in time, and the markets have gone through similar transitions. So in terms of players, number 7, players, you know, the lesson learned is that players need to be encouraged to be adaptive and nimble. And patient. You know, there are lots of eventualities that maybe weren't planned for, maybe changes in regulation, changes of leadership, changes in management, but also maybe in terms of the product being changed based on the specs that are required based on the regulators' guidance. So there's a need for them to understand there's a need to be adaptive, nimble to change, but also patient. The other thing is relating to the business case in terms of scaling up. Like any other products, microinsurance is a numbers game in terms of number of lives covered or policies sold, in terms of premiums received, and then also being able to break even and look at profitability. So scaling up comes in stages in most cases, obviously, but also being able to look at sustainability. It's a long-term stroke medium enterprise or endeavor. So there's a need for all players who are interested in being in the microinsurance space to understand that. So that's been a learning for us and also for the industry, for them to understand it's not a 1 year or 2 years, but it's a longer commitment for the organizations. The second area is monitoring progress to understand behavioral changes. And what we mean by that is Tanzania has gone through a KPI, key performance indicators training that was supported by Macrofact, which we're thankful for. So back to partnerships coming into play. But there are key parameters that have been set to be measured. So it helps to know where you've come from, where you're going in terms of the transitions that are happening. But behavior changes are the market being more responsive, which products are coming out and why. So really understanding that. And also recording case studies. It's important for the market to also learn of what has been done well in the country. So how do we document and be able to share those particular success stories and what has been done, how well it's been done, and who has been involved as well in that. So I think those are some of the key areas: behavioral changes, case studies, and disseminating. But also in terms of the lesson learned, sometimes there's a lot of focus on the supply side, the enabling environments, and the demand side, but we ultimately need to remember at the end of the day, the beneficiary is the customer. So how are we able to ensure that we are touching on the needs of the customer and adding value to their lives in one way or the other in terms of the management of their risks. Thank you.
Okay, thanks. And Eduardo?
Sure. Let me offer 5 very short lessons from Peru. The first one, can you switch to the next one? Is you have to have this open dialogue with the regulators, but not just focus on this open dialogue and the strategy, but actually what for me is key is the implementation. I think many countries fail at this last mile. The second, as I said, data rules. If you do not know where is your starting point, you are never going to find out if you're progressing or not. Third one, you have to be aware of this regulatory arbitrage. Maybe you're not seeing it, but the market is actually checking that out. Fourth, and this is something quite important for us and for many countries, given that we are in the middle of this pandemic, is that you are working as a complement of whatever there are some social protection policies in your country. Okay, so now with COVID, the demand for life insurance has completely changed. And now we have this huge opportunity, huge window of opportunity that has not been play out from the government. Is going to be privately done. So you have to always be aware of what are the social protection policies in your country and which are the opportunities there. And the last one is that, do we have to think about if, given the size of the market that we have to cover, regulators have to actually discuss this internally, if we need like a special license for a specialized microinsurance institution. At least in the case of Peru, you do not have anything like that. You have the standard carriers that do everything, and there is no special license for institutions that are going to be only aiming at these particular markets. Thanks, Lemmy.
Okay. Thanks so much. And we are nearly at the end of our session. And just to sum up, I think, by showing you this slide that gives a summary of what we've covered. So I think in the Philippines, Dante highlighted the need for champions of financial inclusions and not to get stuck with what is written, but be agile and look at opportunities. And then, of course, from Tanzania, I think Kim highlighted that we should still remember that microinsurance is a customer centricity, human-centered approach, I think is very critical there. And then from Peru, of course, Eduardo has highlighted the need to be coherent in terms of implementation and of course dialogue with the regulators as well. So it's been quite an exciting session highlighting the differences, but also some common lessons across the markets. So I think before we close, maybe I'll now just hand over to, first let me thank the panelists for giving us the perspective of national strategies, especially across the 3 continents. I think, thank you so much, Dante. Thank you, Eduardo, and thank you, Kemibaro. And like we promised, we'll definitely have this presentation shared online. We've seen a few questions which were follow-up on mobile for Tanzania. I think Kemibaro should be able to address those. So you'll definitely get responses. We'll try as far as possible to address any questions that we haven't covered. So over to you, Dick.
Thank you, Lemmy, for facilitating such an interesting session. And thank you to all the panelists. Unfortunately, again, time is over. 90 minutes fly by very quickly. But the idea of that was just to give an initial start to think about how you can come up with a strategic plan to develop microinsurance market in your country. I know there are a number of countries interested in that topic and trying to get up the market. We saw one questions, how can you develop products if there are non-products? I think that came from Jordan. So I think the speakers are available to give their feedback also on one-on-one. You can contact them. If you don't have their contact details, you can contact us and we will facilitate the discussion process and certainly continue that. I would like to invite everyone to the next session, which starts in 30 minutes, talking about leveraging sovereign insurance to build scale. Again, with lots of representatives from the Caribbean. And I'm also looking very much forward to that session. So thanks to all the participants, panelists, and to you, Lemmy, for that interesting session. And see you. Bye-bye.
Thank you. Bye-bye.
Bye-bye.